Hello and welcome to Dialogue. I'm Xu Qinduo. China and Germany has renewed high-level financial talks in Germany on Sunday. Both sides reached agreement on some 25 topics. Increasing cooperation in insurance and banking and expanding mutual market access were high on the agenda. What is the state of China-Germany economic relations right now? Are we going to see closer cooperation between the two countries while Germany is also de-risking from China? And what the future looks like for China-Germany ties? To answer these questions and more, I'm joined by Professor Iain Begg from the London School of Economics and Political Science, Professor Liu Baocheng at the University of International Business and Economics, and Qiang, Research Fellow at Beijing's Foreign Studies University. Before we start the conversation, let's take a look at this report from Peter Oliver.
It had been way too long since the two nations had met at this level.
That's why it would be conceivable to hold this financial dialogue not every 2 years but annually, perhaps also with the involvement of private sectors. In any case, I noticed from expression on my Chinese colleagues' face that this idea was being looked at with favor, and that will be another success of this high-level financial dialogue.
Christian Lindner is hopeful that following his meeting with He Lifeng, Frankfurt will become a bigger hub for international banks and financial services. It's already home to Germany's DAX stock exchange, and Chinese financial firms have a strong foothold in the city. That could grow. And it's set to be a two-way street with investment bankers like those from Deutsche Bank just behind me, perhaps looking for their German to Mandarin phrase books, as they've been given the green light to do more transactions in RMB in China.
It sends a very positive signal that this is not the black and white world that people who for the first time think about Sino-European relations have a better picture in looking into what the real opportunities are. And not everything is crystal clear what it practically means, but it very much looks like great opportunities are ahead of us.
Trade between Germany and China was worth close to $300 billion last year. The agreements in the joint statement from the leaders show that Berlin and Beijing are ready to try and drive that business relationship forward, something a currently recession-mired German economy sorely needs. Peter Oliver, CGTN, Berlin.
Well, welcome to Dialogue. Baocheng, I will start with you. So this China-Germany high-level financial dialogue mechanism was established in 2014, and then for the second dialogue was held in 2019, right before the COVID-19 pandemic. And now, finally, we had this the third dialogue, after 4 years. Tell us more about this mechanism. What is it for, and why it is important for the two countries?
Well, for the entire EU, China has really attached a greater importance for trade and investment given the hostile environment, what is going on in North America. And at the same time, the EU sees this opportunity to participate in the booming economy in the Chinese industries. And as a matter of fact, the dialogue on finance has been going on almost in synchronization with the bilateral investment treaty negotiation with EU, in which Germany is the leading member. And both sides see that the importance of trade and investment, particularly when Germany is having nearly 90% of its revenue from China, and we have been the largest trading partner for Germany for consecutively 7 years. And so many the leaders in the business community from Germany, they see the great opportunity and also the great potential to be tapped. And now, with more of the opening of Chinese in terms of the sectors, so particularly with more of the financial sector, be it banking, be it insurance, and they also see that will be an added advantage for the German companies to operate in China. So that's why the interruption of the COVID is finally over, and now the resumption is highly needed, and it's a critical juncture for us to really renew and continue, hopefully on an annual basis, on this dialogue to smoothline the number of, I should say, more of those, the disagreements and also the ambiguities that is lying ahead for further opening of the two markets.
For the opening of the two markets. Iain, if you look at these agreements, largely like the joint statement from the two sides, they agreed with each other on the multiple areas, 25 of them, increased access to market, both sides. And also, they are, both sides are against protectionism, they are for the rules-based multilateral, basically trading system surrounding WTO, etc. There's this sense of optimism, and also, and people would say, largely would say, this dialogue is a successful one. What's your take?
Well, first thing to say is that China and Germany have, let's say, at least three significant things in common. The first, you've already been hinting at, is that they are both export-orientated growth models. China clearly has a massive surplus, like Japan, but Germany within Europe has a massive surplus vis-a-vis not only the rest of the world, but other European countries. And this is a significant part of its growth potential. But the two countries also face two challenges in the coming years. The first is the energy transition. You know about Germany's attempts to wean itself off coal, its dependence on Russian gas. China, I think, faces something similar, and is moving very rapidly towards a much less carbon-intensive energy system. And the third thing both countries face, China probably equally with Germany, which is among the most vulnerable in Europe to this, is the demographic change, an aging population, which is requiring them to think about new ways, not just of funding their economies, but whether a different growth model might be more appropriate. So all these things, I think, motivate a coming together to say, how can we learn from each other? How can we recalibrate our relations with the rest of the world? Because we are two of the biggest players in export markets, maybe a bit less so in financial markets, but financial markets is one way we're going to try to change our model towards something different from the reliance on manufacturing, which has been at the core of the growth model for so long.
We'll speak of the financial sector, Qiang. Some of the highlights were both sides agreeing to cooperate on insurance supervision, establishing a dialogue to exempt some requirements for Chinese banks in Germany, and at least one Chinese bank to establish a subsidiary in Germany as its European hub. It seems that the European side and the German side is keen to secure the Chinese banks to invest or conduct business in their cities here, meaning Frankfurt. What do you make of that?
Well, I think this is actually an excellent conference. Well, personally, I've been a participant in these activities for years. In 2017 and 18, we had parallel scholar meetings alongside of these meetings. So personally, I was in Frankfurt as well. I witnessed everything has been progressing for all these years, even though we have the interruption of the pandemic for 3 years. But now we're very glad to see everything finally are making breakthroughs and achieving very, very high. So basically, like you just mentioned, I think the cooperation is solid. We can just shorten them in 3 words. One is digital cooperation, second is green cooperation, and third is the regulation and cooperation. Of course, they're all in the financial sectors. For example, like the regulation sector. So why in China? Actually, you probably, for our audience, if you're not in the financial sector, you probably don't know that China and Germany actually have very close relations in financial corporations. Do you know when China grow into aviation and also the space, a big country, the Munich Re, that insurance company, is the first international insurance company to provide insurance for Chinese rocket launching. So this is just one of the start. But for very, very, and also letting alone the Deutsche Bank, one of the most important European commercial bank, has already set up their very early branches in China. and also vice versa. And China also have very big commercial banks in Germany as well. But why we're still talking about this? And also, last time when I was in Europe, we visited Germany as well as in Luxembourg. You will find one funny fact is that many of the HQ of the Europe of the Chinese commercial banks are located in Luxembourg instead of in Frankfurt. That is because the regulation standards are different. So Germany really want to revise that situation. They want to improve their conditions to recalibrate with the standard with China, also as well as with the international standard, so that Chinese commercial bank like the Giant Four, at least one of them, can have their European HQ in Germany, relocated to Germany. So this is just one of the start. And also I think this standard can be spilled over to insurance companies. Later you're probably going to see Chinese huge insurance company also be moving their European HQ into Germany as well. And also this cooperation means a lot for China as well, because the Bundesbank von Deutschland, which is Central Bank of Germany, is actually one of the most important player for the ECB. So which means when we have this regulation, cooperation on the standard and everything with Germany, and then we can meet the standard basically of all European Union. So this is an important step for Chinese banking sector as well. So in the coming 4 or 5 years, we're going to see more of the solid progress made in this area. More and more detailed examples are going to happen in this area.
Okay, so more is to happen in terms of such kind of cooperation, or let's say moving the headquarters from somewhere in the European Union to the German cities there. That would be interesting to watch. And Baocheng and both sides also agreed to open market access, which is, quote, based on level playing field, while at the same time committing to combating trade protectionism and supporting the rules-based, non-discriminatory, fair, open, inclusive, equitable, and sustainable, transparent multilateral trading system with WTO at its core. The opposition to protectionism, of course, what comes to mind would be what happened, the latest about the so-called investigation into the reported subsidy of the Chinese EVs, or you see protectionism from Washington, basically. That's, I think, basically a consensus, for people to watch there. So what do you think they are referring to? Okay, we oppose trade protectionism, and we will refrain from doing that.
Well, but I think both sides have a large agreement over these keywords: transparency, accountability, sustainability, and more opening of the market. But it is also a very interesting phenomenon. We see that the e-vehicles, as you mentioned, to be imported into Europe, are really much of the investment derived from Europe, and also particularly from Germany. And you can see that when China is really introducing a tough requirement on the quantity and percentage of e-vehicles to be produced in China, and the Chinese auto industry is highly participated and engaged by the German companies. Look at Volkswagen; they take the 40% of the entire share in the Chinese market. So when German companies, European companies are really taking the leading role, and they're also taking the leading role from domestic market into the export market into Europe. So therefore, it seems that Europe is really kicking or pushing the auto companies out of Europe, and they get parked in China because of the large potential and because of the realistic revenue they earn. And now when they really bring the product they make, using, of course, some of the Chinese resources, but particularly the Chinese cheaper labor, and then they get rejected. So this is really the irony. And the fact that if you look at the subsidies, the Airbus was also subsidized by the government. And as a matter of fact, that is a phased approach. So China is already phasing out the subsidies to the e-vehicles. So therefore, it is really the competitive edge China has really exhibited, particularly to push and squeeze some of the market space for some of the smaller companies in Germany and the EU at large, that really makes them uncomfortable. But it is really the market that really sharpened the competitive edge of the Chinese exporters, other than the Chinese government subsidies. So the probe is really more of a political maneuverability, but I do not think it's really going to bring any benefit to the EU consumers and the EU auto industry. And in the end, I think this is simply a sort of the political show to pacify some of the animosities, the voices raised in that regard. So I do not think this has really come to a very much of a punitive measures against the Chinese exports.
Baocheng, do you see this is a sign? Neither side talked about this. Possible investigation or the EV subsidies during this dialogue. Do you see that as a sign of both China and Germany somehow trying to, trying to reduce the impact of this so-called investigation or the possible investigation here?
Let's take this as an isolated case, because we see that both sides really have good intention to engage and renew their commitment to work together for further market opening, and also to remind each other of the big words like responsibility and accountability, etc. And that's very much also in conformity with the Chinese drive to move for high quality opening, because President Xi has time and again emphasized on the systematic opening by converging more on international norms and adopting more of the international standard. So the banking industry, the insurance industry are really taking the lead to move ahead. And also because capital together is now combined very closely with the real economy sector. So therefore, I think it's a really positive move. So let's treat this as an isolated case, and also, much of the evidence needs to be really, probed before any conclusion can be drawn.
Iain, obviously, the German Chancellor Olaf Scholz, in the interview, he talked about he's not convinced of this possible punitive measures. To be polite, to say the least. He talked about in the 1980s, the Japanese car exported to the European market. In the 1990s, Korean cars exported to the European market. So they hold ground. And basically the idea is they are not fear, they have no worry about the import of Chinese EVs. So they disagree with the European Commission in terms of the possible investigation.
Well, I think it's important to stress that Germany is not the sole voice when it comes to thinking about EVs, because it is, as you just said, the European Commission which has formal competence for trade policy. And that competence for trade policy leads it to try to integrate the concerns of the 27 member states and not just Germany. And then you have a second element to this, which is that the car industry in Germany is a very big component of its export model, but it's a car industry which is spread across Europe. It's a kind of hub and spoke approach, where hubs like Munich and Stuttgart, respectively BMW and Mercedes, have spokes going out into several other member states of the European Union. They do manufacturing, they do elements of design, but the headquarters are in Germany. So the car industry in general is going to be lobbying quite hard in the European Commission to slow down, let's say, some of the potential imports from China. But European consumers are a different story. They're very happy to be able to buy Chinese EVs because they're much lower cost and they're much more attractive financially to them. So there's a tension in two directions there, between China and the EU in general, between Germany's interests and the EU's general interests, and between consumers and producers, which gets messy when you try to disentangle it.
Ian, related, if you take a look at the languages, by both sides, it seems that both China and Germany, they remain a strong force for globalization or for free trade or for more trade, let's say, based on or surrounding the rules of WTO.
Yeah, well, they're export-led economies. They have a strong interest in free trade. The usual contrast within Europe is that France tends to be a bit more protectionist, and some of the tensions at European level are about reconciling the interests of France and Germany. So that is part of it. I would say, nevertheless, that there is some concern strategically in Brussels on the part of the European Commission, but also in many national capitals, be it Berlin or Paris, about what's called strategic autonomy, this concept that was initially floated by Emmanuel Macron, the French president, the concern that somehow Europe is vulnerable to too much being produced in China and therefore needs to reshore or repatriate some of the activities that have previously been purchased from China and other suppliers in Southeast Asia. So that tension too has to be factored into the storyline.
Well, Qiang, if you look at this relationship between China and Germany, for example, investment for this first half of this year, 2023, is about 10.3 billion euros. It's slightly less than 12 billion euros invested in the first half of last year, but it's the second high, let's say, in years. So do you see the slight drop this year? I mean, it's just not much in terms of the numbers. Is that a problem? Or, I mean, you are happy, it's fine, compared to probably 2019, it's more than 2019 or 2020.
Well, I don't think there's a problem because if you do investment, you will know the financial are very cyclical, which means if you don't put one of the money in somewhere, next year you wouldn't put the same amount of money because you have already purchased the land, the machine, the equipment. So every round of investment, it can be different, that's for sure. But you only look at the general pictures. Are they increasing? Is everything still growing? And that's the whole thing we need to know. And Germany actually are having a very important interest in China. But one thing is that China and Germany always have a very good relation with each other. Just a very fun fact is that even during the World War II, Germany still helped China to fight against Japan. So that can be very interesting, isn't it? And also, since the outbreak of the conflict in Ukraine, Germany really want to relocate several of the capacities back in the Far East, which is more stable and peaceful. So they understand that. And also for the Europe, another thing, like you just mentioned, aging problem, shrinking demand, and where do they just make up for it? I think in China, in ASEAN countries. So you see in many German companies, they based their Greater China HQ or the Greater Asian HQ in China, which means they still paid attention to this market. They value probably the largest growing middle income class in China as well as the growing ASEAN nations. So these are actually within their thinking, as well as we just hear our colleagues just mentioned, a lot of people like European comedy are saying, okay, Chinese EV are trying to steal your market. But I think German, a country full of philosophers, they have all this wisdom to understand China would not do that because Japan used to pop out. And Japanese car and the German cars, they all have their niche market. Today, it's a similar question, right? Chinese EV will have its niche market, and German vehicle will also have its niche market. Everybody can profit from this competition, and everybody can see the progress in technology together. So it's going to be a win-win eventually. So I think in the future, German companies will still value, their investment in China. And also, as I heard from many friends from Germany, they're planning to do so. Not only the traditional company, as well as many of the growing SMEs in technologies. And also, let's just think about this. Even though right now we have competitions in the automobile sectors, but also with Chinese growing in the EV industry, more of the German companies are still benefiting from it. Mm-hmm. For example, the Bosch. We have the electric motors using from the Bosch, and also China is importing more of the Airbuses from the European market. So we're going to have a closer tie instead of getting away from each other.
Yeah, but Qiang, there's this is a relationship not free from problems. For example, despite the talk of level playing field, the German side has been reportedly talking about, basically get rid of the Huawei equipment from their telecom system. I mean, how level playing field is that?
Well, I think, first of all, every industrialized country, they used to have some certain kinds of subsidies to their own product, for sure. Germany used to do that. America used to do that to England as well. And Japan used to do that to American market and the European market as well. But that's not forever. It usually just lasts in the baby period of time. So when their industry just get matured, and then they will get close to the international reach, fulfill the international commitments. Everybody will have this, fair play in the market as well. China is a large country with very solemn commitment to the WTO and trade partners. So China is trying to fulfill its commitment right now, as well as talking about Huawei. And Huawei, I don't think it's a fair example, because Huawei made all this technology breakthrough mostly by themselves, independently. So I think their bashing on the Huawei product in Europe is mostly being misled by, some suspicions by some politicians. It's politics, not business competition. So I think this is something we need to pay attention to.
Yeah, more about politics. But for Iain and Baocheng, briefly, of course, before that, we heard of, quite an amount of de-risking strategy, either EU-China relationship or Germany's China policies. So Iain, here now we are seeing basically almost that the meeting as successful as before 2019. It's like a deja vu of basic cooperations between the two countries. So what is the strategy? What exactly is the German strategy on China here?
Well, I think we're seeing two things happening simultaneously. Germany recognizes that China matters. We all know that. It matters because it's a major export market, but it matters also because of suspicion about what's going to happen next in the United States. We can all speculate endlessly about whether Trump will come back and completely turn everything upside down. But the United States is in the background in all of these discussions. And more specifically on Huawei, the message that's coming out from European politicians to citizens in Europe is we are suspicious of Huawei because they have an obligation to report to the Chinese government. Now, whether that's true or not, I have no idea. But it's the way it's being framed in the European debate is that Huawei equipment risks being used to spy on what you're doing.
Well, Baocheng, briefly, before the U.S. had a problem with the Huawei, there's no questioning about Huawei, right?
Well, to answer your question first with regard to the de-risking, and de-risk, does it mean the totally, by definition, to reduce dependence on China? Well, they have to look at the other side of the coin by reducing their dependence on China's imports and export and also investment. I think it's going to increase their risk. Because it is really the business community who are making a wider decision. So the de-risking is more of a political slogan that is there to meet more of the outcry from the leftist. The other issue is really the structural divergence, because China used to have full compatibility with Europe and also with Germany. When China was supplying more of the textile, the raw materials, etc., and then when Europeans and Germans sent more
like
of the high-tech stuff. In China, but right now with the high-quality growth.
With that, we come to the end of today's show. Many thanks to our guests. You can also find us on the CGTN app on YouTube. I'm Xu Qinduo. Thanks for being with us. See you next time.